Good evening, ladies and gentlemen, and thank you very much for joining us here. As I pointed out, this is the 9th event that I've done at the State Bank of India Banking Conclave, so it is a privilege to be back again with some very eminent CEOs to talk about the road ahead for the Indian economy. You talk to anybody at this point in time, whether it's multilateral agencies, people in government, foreign CEOs, domestic CEOs, I think there is consensus that India is relatively better poised today. Of course, we are living in volatile times. There is a fair amount of turbulence. There is, of course, uncertainty on where we are going to be headed as far as rates are concerned, what is going to happen on geopolitics. But within that milieu, India is resilient and India is doing better in comparison to a lot of the other developed economies. But the question, though, is that for this to be India's decade, do we have the building blocks in place? And if we do, what else needs to be done? Where do we need to accelerate momentum? Where do we need to intervene? What kind of urgent action is required to be able to ensure that we can actually capitalize on this opportunity? So without further ado, let me get started with our CEOs today to draw out that action agenda for change. And I am going to start with you, Mr. Khara, because you are, in a sense, the pulse checker of the Indian economy. So let me get a sense from you. I mean, it's been a stellar FY23 for the banking sector, and I'm glad that the theme this year is on what banks can actually do to further accelerate growth. But is this going to be sustainable? Is this replicable? Are you starting to see some signs of nervousness coming in as far as the economy is concerned? Credit offtake has been strong. Do you expect that to continue? Net interest margins, pressure expected given the fact that rates are moving higher? An outlook really as far as the mood is concerned.
Thank you, Shereen. Well, of course, when it comes to banking system, it is proxy to the real economy too. So when I say it's proxy to the real economy, how strong the economy is, that will get reflected in the banking system as well. So as you rightly mentioned that, in the current financial year, probably India stands as the most shining star across the globe, and accordingly it has got replicated into the performance of the banking system as well. So I think the way I look at the scenario is that you talked about whether it is sustainable or otherwise. To my mind, so long as the risk is understood well, the risk is priced well, I think there is no challenge to the system. And I think the learning which we have from the past decade, when the last infrastructure story got unwounded and a lot of growth happened in the power plants and stuff like that. That was a point of time when perhaps the equity was nothing but the hybrid debt. So I think to that extent there is a learning which has been incorporated well by the system. And today it's not merely the equity, but the color of the equity is looked into while the lending is being done. So that's one of the important component. And second very important component is, last time when the whole system went through a meltdown was a point of time when corporates are already highly leveraged. This year when we are seeing the growth story, corporates had almost deleveraged themselves. So I think that is the other very important component that gives us a confidence that perhaps the path which we have started treading is probably maintainable. The third important component is from the ecosystem. Last time when all this happened, the social infrastructure in terms of insolvency courts were not in existence. Losing the control of an enterprise was more of a fiction. Today it has become a reality. So I think that has brought in the required discipline on the part of the corporates. The ecosystem in terms of bureau, ecosystem in terms of the strengthening of the other infrastructure relating to ratings, etc. That has actually given us the confidence. Even GSTN and such kind of infrastructure has given us the credible data to evaluate the risk better. So I think I would say that from the infrastructure point of view, the banking system is much better placed. They have got the benefit of leveraging all these ecosystem partners and arriving at more scientific decisions, and they can assess the risk much better. They're better equipped in terms of capital. So I think all this put together it gives me an impression that today the banking system is much better placed, and probably the kind of growth which you are seeing is sustainable too.
Well, that's good to hear, and I thank you very much for very comprehensively setting out the context of what is different this time around. And you're right in pointing out that, to quote the former Chief Economic Advisor, Arvind Subramanian's caution around the issue of the twin deficits, and those have been significantly improved, both as far as the banks are concerned, as well as corporate balance sheets, both looking a lot healthier this time around, as you point out. But Mr. Khara, given the fact that you actually have the banking sector that's willing to lend, and you have corporate balance sheets that are looking a lot healthier, the finance minister at a forum like this exhorting once again industry that why aren't you going out there and investing? What's wrong with Indian industry? Where is the risk appetite? Where are your animal spirits? Are you seeing any change in that? And why do you believe we're not at this point in time seeing an unleashing of the animal spirit, so to speak?
No, we are already seeing a fairly good pipeline of the proposals. I can probably share the number with all of you here. It is as strong as about 2.5 trillion with State Bank of India itself. And also, let me share with you, last year we had seen almost about the proposals, in fact the fresh investment coming in about 20 trillion. This year it is already about 12 trillion. So that is a very clear reflection that people have faith in the demand in the economy. I think that is something which is most important. And I would say that if at all there is a demand in the economy, perhaps the corporates are willing to invest, corporates are willing to come with the infrastructure and also the capacity creation too. And the second important component is the capacity utilization has improved to about 75%. So that's a very clear reflection that corporates are there to really take the opportunity to their fold and see to it that they contribute meaningfully. So I think I would say that, and last year also we saw about 70% of the fresh investment coming in from the private corporate sector. This year also it is as high as about 68 to 70%. So I think these are the numbers which gives me the confidence, and what I mentioned in terms of the pipeline which is there with the bank. So that very clearly is actually a reflection of the kind of mood which is there in the economy as far as the fresh investments and development of the credit is concerned.
Okay, so the mood is looking strong. Mr. Shankar Raman, you're the other gentleman on this panel with a check on the mood as far as the economy is concerned and animal spirits as well. So let me get a sense from you. Mr. Khara was talking about demand visibility and how that continues to hold and it's looking strong. Utilization rates, depending on which sector you operate in, between 65 to 70 or, as he pointed out, 75%. What's the sense that you're getting? The government continues to front load as far as CapEx is concerned, and as part of the pre-budget consultation process that's underway, that's the number one ask from industries, that the government must continue to do the heavy lifting when it comes to CapEx. What are you seeing on the ground at this point?
I think...
Okay.
Thank you, Shereen, and thank you everybody for having me here. I think India is in a unique place. I do not know whether it is providence or whether it is planning or it is a combination. We went through the turmoils of the last 2.5 years rather well. And what that has done to us when we sit in the boardroom and keep debating about what next, what it has done to us is given us a sense of self-belief that the country, its ecosystem, and given all the challenges that we face, sometimes I do think that the fact that we are always asked as a country, as people, to do more with less, because we're always resource-starved economy, resource-starved system. So the accent is always to see how best you can extract. You can't help some amount of trickstering happening in this, but setting that aside, the fact is all of us think that India is in good position to dream about its aspirations for the next 20 years or 25 years. To that extent, I think the name Amritkal is so very fitting, that it does indicate how we feel about India. There are a lot of things going for India at this moment. Obviously, I think there's a very aspiring population which wants to make a difference to its own living standards, etc. And a government which is very keen that the growth should be inclusive. And I think Mr. Khara made a point in this opening remark about the divide between village and cities. I think if I look at 3-4 cornerstones of our plan, inclusivity comes to my mind very strongly, because I think all that the government is talking about is to get more people on the train, to make sure that all productive resources are deployed. I mean, I could even think in terms of the goals that we have internally as an organization to get more women included into the workforce, because 50% of India cannot operate at sub-productive level given the fact that they're as intelligent and as resourceful as people. So given this, I think inclusivity is going to be one reason why all corporates feel that the time ahead is favorable. The second most important thing is also the fact that we are looking at productivity. I think most of the investments, when we came out of the pandemic, even through the phase of the pandemic, all that we were focusing on what to invest in to make ourselves more productive. Because obviously the resources were getting scattered, so we had to get our machines to do more than what people could do originally. And all of that led to IoT, and thankfully the technology never slowed down in this phase. And we were able to exploit the technology to make the machines produce more. So productivity was another key factor. The third important factor, according to me, is sustainability. I think thanks to this disruption that has happened in the world in the last 3, 4, 5 years, we are now beginning to look at every initiative as, will this last the mile? Is capital allocation going to be faulted for betting on the wrong horse? A lot of thought actually goes into it. And today our board is demanding scenarios rather than just going with the management's enthusiasm to put capital to work.
One intervention that the government made in the month of May was bringing in the export duty on the steel sector. And of course, there were other changes as well. Industry had no choice but to accept it, but that has now been reversed. But given the global environment and given where global prices are and domestic prices are, will it materially change things in the short term?
Number one, when Finance Minister was asking in various forums why private sector is not investing, when so many reforms have been done, so many building blocks have been built over the last 70 years, 75 years, and there is nothing which a private sector can ask for, because the tax side there are so many benefits that have been extended. But if you see last 3 years, even though demand is there, supply side there were so many constraints. Either you call logistics constraints or the supply side constraints. We were not able to produce in many industries. Demand was high, but supply was not there. That's why inflation cropped up in several sectors. But it is the first time where we are seeing that the capacity utilization in the manufacturing sector, it is a 3-year high. It is almost 75%. That is why company by company, sector by sector in the private sector, today is announcing that they would like to commit capex, or they are in the process of implementing various projects to meet the ongoing demand. If you look at the commentary in the last at least few months, it is completely changed. Earlier, whether the growth in India as far as GDP growth is concerned, we will continue to do at 5 to 6%. Today it is not. We are going to reduce our GDP growth, but whether we will grow at 6% or 7% or 8%, that is the story which everybody is talking about. But one important point, when manufacturing sector is creating capacities in India, it is not only to meet domestic demand, it is also for export markets. When everybody is talking about recession, as far as India is concerned, we are growing at a rate of 6%, and only debate is with 7% or 6%. That is the whole debate is happening. To answer our question, when export duty was imposed, as government clarified or industry has clarified several times, that was intended only to contain inflation. So inflation has come down, duty was removed. But the point remains is whatever capacities that have been created in India, particularly steel sector, if I look at it, 154 million ton of installed capacity has been created in India, which was 15 million ton in the year 1990. So there is a lot of capacity which has come in. Out of that, in the last year, 2022 March, India exported 19 million tons of steel from India. And at the same time, engineering exports have grown so high in the last year. It is $112 billion of engineering exports. It is steel intensive exports. So when these exports are got affected, notwithstanding demand growth is there in India, is it possible to continue to create capacities until global economy recovers? May not be possible, because we are creating capacity here because we are competitive. That is why we are creating capacities in India to meet domestic demand and also the global markets. So at the same time, what is really interesting here, in the year March 22 financial year, India consumed 106 million ton of steel. Whereas in this year, the growth is 11%. That means our demand will be 115 million tons. 9 million ton more growth. Can anybody say India is not growing? India doesn't have potential? Impossible. Similarly, if I look at next 25 years, the kind of investments that are required in India, building our country, huge amount of cement, huge amount of steel, huge amount of metals required. So demand growth continues to be robust.